So now let me take it to the chart and show you how you can use the dollar index not only to help confirm or deny as you're trading other currency pairs, just using this on correlation, but you can also apply direct technical analysis to the dollar index to tell you where that's more likely than not going to move. All right, guys, so we're looking at the dollar index here on the daily time frame. First, you see I'm using green and red candles just to keep everything clean here. Now, for those of you that really follow me a lot, you know I like to trade with black candles. But when we're looking at anything but the Forex market, I switch over and use green and red. The reason for that being is because here in this market, looking at the dollar index, you can have gaps. And if your candles are black, it's hard to tell the difference if it's a bullish or a bearish candle because of those gaps. Now in the Forex market, because there aren't gaps very often, black candles are a lot easier to read. So here, we're going to look at the green and red candles. Now, I have no EMAs on, no TDI, nothing, except my support and resistance zones. If you haven't seen the video on how to draw support and resistance zones, I teach you the 2-candle rule, the same thing I teach in the course for free. So you can click that, I'll link it right above and down below, even in the description, so you can understand exactly how I draw these zones. Just to kind of keep this video rolling, I'm not going to go in detail on how I drew these blue zones. You can see that I boxed off the pins that are most important, but like I said, if you really want to take that deeper and understand what these blue boxes mean, click the link above, click the link in the description below, and you guys can check out the support and resistance training video too. It's on YouTube, it's free, you'll enjoy that. Going forward with this idea here with the dollar index, now that we've got the zones drawn, these are not support or resistance zones, and I talk about that in the other video. They're just price sensitivity zones. And what they tell us is that when price reaches that, market conditions are more likely than not going to change. So if you read this chart left to right, as we've been making an uptrend, a small uptrend here from 2019, where we started in January setting the low, we respected that zone and moved higher. It created another zone here, February, respected that zone and moved higher. It actually came back to that zone in February. It came back to it in July and retested it and moved higher. So these zones tell us a lot. If we break the zones, price should continue movement in that direction. If we test the zone, we know market's conditions can change. So here, for example, in July, as price started to drop and the market gets worried because of 3 huge red days, we know that as it approaches a zone that it's bounced off of before, we could see the market change conditions and come higher, and that's exactly what it does. So now, going forward and applying it into our daily trading today, we just broke through a zone that was set here in the beginning of August. Today, we had some dollar news here at 10 a.m. that came out lower than forecast, which is pushing the dollar index down today. It's basically common sense. More often than not, when you have negative dollar news, you're gonna see the DXY fall. Now, someone in the comments is gonna say, Austin, I've seen negative news and the DXY goes higher. Like when 9/11 happened, the DXY went higher. I understand that. It's never going to be 100% of the time that's the way things happen. But understanding probabilities and using technical analysis, using zones like this, can help you say, look, let me read the fundamentals. What's news saying today? Are we going to expect positive news, negative news? Where are we at? Are we at a price sensitivity zone? Are markets willing to change conditions here because of that news? Those 2 questions are going to help keep you out of bad trade setups and help confirm if you should be actually trading those setups. Now, to take that a step further, using the dollar index to trade other currency pairs is very simple. Like I said already in the video, if you're trading, for example, Euro USD, if you see the dollar index rising, even on the 15-minute time frame, if you see the dollar index rising, or let's even make it more specific today, you see this huge news pin here, 9:30, going into that 10 a.m. dollar news. We know that the dollar news can impact Euro USD. So what we can do is look at the dollar and look at the euro to the dollar and say, what is this market more likely than not going to do? What I first would do is add in some EMAs so I can identify my trend. Here, we were in a downtrend now, we can see overnight, and then found consolidation through the London session into the New York session prior to that news. And what that basically tells me is that because news was coming, we knew that price was going to consolidate, and it does, right between that low set here, right at the end of the Asian session, to the high set here at the start of the London session, and it just chops in between. Knowing news is coming, we would wait. You would never want to trade into high impact news. We talk about that all the time. But we would wait to see, okay, I'm looking to trade Euro USD. I'm going to see how does the dollar index react to the news. Okay, dollar index was reacting negatively, coming lower. That means Euro USD is probably going to move higher. And that's exactly what it does. And now I bet if you watch this progress as the day goes on, more likely than not, it continues higher without retesting this zone that it was chopping between earlier this morning. Because what it did was it said news is coming, let's collect our orders, and once news is done, however the dollar is going to move on that, it's going to move Euro USD opposite. So because the news was negative and it pulls the dollar index down, Euro USD goes higher. You can even, if we want to be really advanced, take this a step further and use a TDI to help identify divergence, so you can think 3 steps ahead. And I know this is a lot, but if you can do this, you can say, look, news is coming, I can see divergence, right? I can see where this market could be setting up. Oops. I can see where this market could be setting up for some rise. And now all I need to do is wait to see if the dollar index reacts to the news, and if it does, that will tell me how to trade a pair like Euro USD. The final question I know a lot of you guys will probably have for me is, well, Austin, how do I use the dollar index to trade something like GBP NZD? The way that I would explain it to you is this: because neither of these pairs are correlated to the US dollar, neither of them, it's GBP and NZD, I wouldn't rely on the dollar index too heavily for my analysis here. And I know that's not what a lot of people will tell you. They'll say you can still use the dollar index because it drives the currency markets. I'll disagree with that. I'll respectfully disagree with that. I'll say if it doesn't include the dollar, I wouldn't rely on it to even 50% of an extent. I would look at it, analyze it, and see if it even tells me anything at all. But what would the dollar index dropping have to do with GBP NZD moving? Yes, the dollar index and the dollar are traded the most every day in the Forex market. I understand that. But what directly? You can't really tie them together because there's no direct correlation as there is when you're trading a USD base pair or a USD quote pair. So for pairs like GBP NZD, CAD CHF, you don't have to worry about the dollar index as much. But still keep in mind, and I've talked about this, like I said earlier in this video and before, high impact news. When high impact news is coming on the dollar index may move, the dollar pairs may move, and that can shake your trade. So not trading into those high impact news events is very important, and also not relying on the dollar index for pairs like GBP NZD is another important thing. But just keep the focus on the USD base pairs. If news is good, dollar index is moving higher, USD base pairs will follow. If news is bad or dollar index is moving lower, USD base pairs will follow. Quote pairs will move opposite. They're inversely correlated.